What's the demand scenario, and why is it that QSR stocks are trading at such expensive valuations? Let's try and put all of this into perspective. We have with us Karan Taurani from Elara Securities, as well as Narayanan KS, who's a QSR consultant, joining in the show right now. Gentlemen, good morning. Good to have you on the show. Karan, if I could kickstart the discussion with you, what is your own understanding of how the consumer sentiment is panning out? Because in my personal experience, you try and go over the weekend to any of the Mumbai restaurants, either it's all booked or there's a long waiting line. Clearly seems like demand is back and thronging.
Yeah, as you rightly said, after the second wave, the hit on the F&B industry has not been that bad at all as compared to what happened during the first wave. Multiple factors here. One is, of course, if you look from a restaurant standpoint, purely in terms of their revenue, delivery was allowed as an essential, the entire second wave of lockdown versus the first wave. Second thing, after a year and a half, after a year passed by, people actually realized that COVID is something which does not spread through food. I mean, food is not a spreader of COVID, and that actually, kind of also took away the fear factor also from the consumer mindset. So I think, that's the second part, and third part, of course, is the organized players. So customers are really willing to go to restaurants, which are good, clean, hygiene, have got hygiene, safety measures, everything put together. So I think these are factors that are driving this entire growth in QSR. And most of the listed players today in the country are in the organized space, and they are a part of the global QSR chains. So I think that's where they are at a huge advantage here, and they're gaining a lot of market share from the unorganized space, which is losing because of this loyalty hygiene factor, and also many of them are even shut down because of working capital and liquidity issues because of COVID.
Yeah, absolutely. Narayan, if I could get you in on the discussion as well, is it more an urban phenomena where people are thronging and, either dining out or, getting the takeaways in? Or would you say that the consumer sentiment is as high when you go outside of the metros to the tier 2 and tier 3 cities as well?
Yeah, I'll put it slightly. First, good morning and thanks for having me on the show. First and foremost, I think except for select sectors like your catering, multiplex, IT parks, and malls to some extent, literally the demand in the high streets is really back and come back in a big way. So all through the day, we are seeing good amount of dine-ins as well as delivery happening, though delivery was the predominant force during the pre-COVID sessions when delivery was allowed. Now, further, what we are also seeing is that the demand actually in the tier 2, tier 3 towns is far, far stronger than what we are seeing even in the tier 1 town. So literally, many of these restaurants, international brands, they are the landmark go-to places in such destinations. There are hardly any choices available there, and these have become the landmark destination. So actually, what one is seeing is that the throughputs coming through from those towns are actually far better than what they ever would have imagined. Yeah, certainly there is a weekday, weekend skew, but nevertheless, I will say it is as strong or stronger in the tier 2, tier 3 towns than in tier 1 towns. Because tier 1 towns has also got a density of outlets which is there. I mean, many of these brands almost having 50 to 150 outlets in each of these larger cities. So that is also really panning out in that way.
Hi, Mr. Narayanan and Tara here. So let's talk about this metro cities versus the smaller town phenomenon. Cloud kitchens had, of course, become really, really hot during COVID-19 for very obvious reasons. You have Rebel Foods, the owner of Bedroo's Biryani, which recently became a unicorn. We've all seen how Swiggy has bet on this space. It didn't work out the way Zomato wanted, but you've got Jubilant Food Works, which wants to do biryani for 99 rupees. ITC Hotels, the owner of Bukhara and Dampukht, is now also using cloud kitchens to sell you, your favorite biryani and kakori kebabs. This trend, can it continue beyond COVID-19, or do you think its shelf life is pretty much with the pandemic, as revenge dining has also become, something we're seeing?
Not really. I think when I look at it, even from a perspective of what's happened in China, what's happened in the US and advanced markets, etc., this looks to be a secular trend. So what is really happening is that you've got this whole new set of audience who are literally armed with a mobile phone, ordering, etc. So there is a sea change as far as the Gen Z, millennials, etc. is concerned, and their relationship with food and how they sort of go around with it. Now, what clearly comes through as far as the cloud kitchens are concerned, the operational costs are certainly lower in terms of your rentals being down, the dining space being not there, and all that. So that clearly is a positive. But of course, there are the other things in terms of you need to build a brand. That is becoming extremely important, particularly post-COVID. Consumers are flocking to more renowned, trusted brands where they can trust their money, their effort. They physically can go out, enjoy, etc. That is a big factor we are seeing. And because of that, we are also seeing all the international brands, the reputed brands, the local jewels. I mean, it could be there are certain ice cream brands in a certain city, all of them, they are really sort of pulling out of the pack and going far ahead. So that is something we are also seeing. So to answer this question on cloud kitchen, it's certainly going to be there. What was earlier maybe 10-15% of the overall average sale used to come from delivery, that clearly is today pegging with normalization happening somewhere between 25-30%. So that clearly is going to continue. And there's a lot of innovation as well happening to make the product travel better, deliver better, etc. So a lot of work happening in that area as well. So all in all, I will say delivery is going to be a mainstay, a theme which people cannot forget or you cannot sort of ignore. And which is why you see even the ITCs and the Tajs of the world starting to move on to delivery of their own food.
So this phenomenon, a secular trend globally, is likely to stay on in India as well. But Mr. Narayanan, tell me something. Are we going to see a situation now where it's going to be the QSRs by the Jubilants, by the Westlives, by the Yum Foods, you know, these will be the McDonald's, the Pizza Huts, the Domino's, the KFCs, which will really mushroom and take up retail space, and the rest of it could just be cloud kitchens and gourmet deliveries, because let's face it, the footfalls, the overheads have to really justify it. You've got inflation also, which is on. And then you just have luxury restaurants which will open, whether it's by Aditya Ghosh and Anjan Chatterjee in London is debatable or not. But is that the way it'll go? Everything affordable will be QSR and cloud kitchens, and dining in could become a more premium luxury experience.
Not entirely. I think, see, the whole, if you look at the whole out-of-home eating market, it's extremely large. And then when we look at our per capita consumption, our going out and eating, etc., is far lower compared to even any of our countries when you look at from the Southeast Asian markets, etc. I mean, the urban Indias today averaging at about maybe once or twice a week. So there, and against on a sort of, we have about 100 odd meals that we can eat typically in a month. So there still the percentage is still very low. So very clearly we will see international chains offering value as well as that is happening, which clearly is the case. In addition, we will also see there is a lot of premiumization of delivery offerings that is happening, because again, with consumers having lesser opportunities to spend, whether it is multiplexes or on travel, etc., having come down, this is another way of socializing. And so the whole premiumization game is also happening. The third, so hence, as a result, whether it's through the cloud kitchen formats or whether it is through the QSR format, that sector is also booming. In addition, food, we will always see, food will always remain local. Local is, I think it's something, it sort of nudges the heart of the people in those locations. So you will have those local jewels. Classic example is we've got some, say, a natural ice cream in Bombay, we've got a polar bear in Bangalore, and so on. A lot of these local jewels exist, and they would also certainly thrive in those areas. So it's not only going to be an either or. We have the cloud kitchens on one side and the QSRs and also the real fine dining one. But there is enough space for everybody. But I think the direction the consumer is saying is very clear: a good branded delivered product, and that is important because of safety, hygiene, all of those factors having come in, and also ensuring that the product gets delivered best to the consumer, the right service.
All right. Karan, I'm coming to you on this next one, because a lot of investors watching this program will be wondering about companies like Jubilant and Westlife, looking at the space that you've just been describing and wondering how to position themselves if they haven't bought. What do you think about the valuations of these companies in the context of this changing landscape? and in the context of their own bullish projections as to how they expect growth to go about over the next coming years?
So clearly, as mentioned, the organized players are gaining a big amount of market share. Now, what has happened, during COVID is that, these smaller chains, the standalone restaurants which were operating, they were having a lot of cash flow issues. And unfortunately, they were not able to infuse capital in the business and they had to scale down or probably shut down operation in many places. Now, that has been a big advantage, for these large global QSR chains because they've really ramped up their expansion plans. I mean, if you look at a Jubilant, they were adding, say, close to 120, 130 stores every year. Their guidance for next year is about 170, 180 stores. So the point I'm trying to make is that, favorable rental deals, the unorganized space, or these smaller QSR chains actually struggling, for, being there in the ecosystem is an advantage for these chains. And that's a long-term structural story. It's not a one-year phenomenon or two-year phenomenon. This is a trend, which might be here to stay because we don't know when these chains which have scaled down or when the restaurants which have shut down, when are they going to come back in the ecosystem? That's one. Secondly, around the valuations, I think most of these companies have seen a huge de-rating, right from Jubilant to Westlife. Their multiples are, much ahead of what their average EV/EBITDA multiple was. So something like a Jubilant is probably at around 37, 38 times EV/EBITDA. Something like a Westlife is around 33, 34 times EV/EBITDA. Now, of course, there are reasons for that as well. So, as Narayan sir also mentioned that, delivery is the next big thing. And earlier, delivery contribution for a dine-in restaurant like a McD or any other kind of restaurant which is very heavy in terms of dining was nothing more than 10 to 15%. But I think going ahead, 20-25% is going to be the new normal for a delivery exposure. And going ahead also, we believe structurally that your delivery SSG will grow almost 2.5x versus the dining SSG. So if you're talking of industry growth rate, SSG growth number of about 8 to 10%, delivery SSG will be growing at almost 12 to 15%, and the dine SSG will be growing at almost 5 to 6%. So that's where the differential factor is. And the more the exposure towards delivery, the better the QSR chains expect to outperform industry average growth rate.
Okay, that's a very interesting perspective and certainly something to watch out for. I want to come to you, Narayanan, on apology, I got it right the first time. On the fact that COVID-19 is something I think that nobody can predict, and we've gone wrong in the past. So when people were wondering about this third wave and planning how to do business, I don't think necessarily things have panned out the way that they had expected. So I think the best we can do is scenarios, right? Assuming that things remain as they are and things go back to normal, how will things pan out come, say, Christmas? And assuming the worst, how do you think the smaller players will be able to contend? Do you see more consolidation?
Yeah. So to answer that question, typically when you look at the whole food service industry and category, the last week of December is possibly the best period in terms of consumption. All schools, offices, everybody, all of them on holiday mood, and it's really a festive around that time, and also I guess weather aiding in the consumption piece. So that clearly is the best period for the entire industry. Now, assuming now we have Diwali coming up in the first week of November, and there is a lot of intermingling of people going out, some of them following norms, some not following, etc. All of that is just happening. So if we see a more clearer trend in terms of the third wave not coming in by end of November, beginning December, as what the experts say, then I think the industry should have an exceedingly good run, particularly running into December, towards the end of December, and running all the way right up to the middle of January. So that clearly is the case, but provided, of course, we don't clearly see any major hiccups as far as the COVID impact is concerned. And from what one is seeing today, yes, there are possibly some cases coming up, but nevertheless, I guess thanks to a large number of consumers having been vaccinated. And the other important thing also for the food service industry is, again, very largely people dependent. And over there as well, we are seeing good number of the young, and they're all a pretty young audience who go out there and work in the hotels, restaurants, both in the front of the house as well as back of the house. And there again, we are seeing a lot number of them with the associations, etc., taking interest in getting them vaccinated. So they're literally trying to be back on the streets and literally hoping for an excellent December end, at least end the year on a very positive and gung-ho note.
Absolutely, gentlemen. That's what we're hoping for as well. Yeah. It's been an absolute pleasure. Thank you so much for joining in and for taking the time.
Thanks a lot.
All right, on that note, we're slipping into a short break.